Okay, on today's video, we are going to break down some of the most interesting things that I'm seeing in my analysis of the local real estate market, especially now that the summer data is all in and we're into September. Thank you and welcome back to the channel. I appreciate you being here. Thanks for watching our previous videos, and I look forward to bringing you a lot of cool information here. My name is Jeff Thibodeau. I'm an experienced real estate broker here in Brantford, Ontario. I've been doing this for 15 years, and digging into the data is one of the favorite things I do on a weekly basis. So I look forward to bringing you this information. If you find any value in this video, you can support me in a couple ways. Give this video a like, leave a comment, and definitely subscribe to the channel because I'm putting out new content every week, including market data, but also right tactical, boots on the ground tips for buying, selling, and investing in real estate. And so all that helps me. And of course, this data we're looking at today is all from a very high level of the overall real estate market. But if you're planning a move or even just curious about what this data means for you specifically, what we can do is we dive into it based on your situation, the type of home you're buying, the type of home you own, or the type of home you might be selling or want to invest in. So all you have to do is use the contact information right below and send me a quick call, text, or email. It all comes directly to me, and I'd be happy to walk through what some of this information means specifically for you and make a plan to reach your goals. Okay, let's get right into the information today. I want to highlight some of the big stuff, and I'm going to try to get through this in a fairly concise manner. The first slide I like to look at is what we call like a hot sheet tracker, and it's updating every day on our MLS system. It's a way we can go in and see what's been happening. And this is a snapshot of how it looked on September 5th. And some interesting things. The first column, the one in green here, shows that there were 39 new properties come on the market in the last 7 days. And that number is about average of what we've been seeing kind of over August. The next one you can see in orange, very interesting, that 27 deals went pending, which means conditions were removed. That home has now got a sold sign on it. So 39 new listings and 27 sales. A pretty strong balanced market for the last week of summer, which really, is traditionally kind of a slower week. But when you look at the bottom of this data, that's where things get interesting. Suspended means the listing was paused and kind of left off the market. Expired means the contract with the listing agent came to an end and the home never sold. And then canceled means they actually took the home off the market early. And now some of these properties have been relisted, but when you add all this up, what you see is that at the end of the month, we actually had a net 30 house loss in inventory in just the last week alone. Now, if inventory is growing, that's usually a sign that the market's slowing and things are going to get more tilted towards the buyers. But this is showing us that the peak inventory is behind us, and actually we're seeing quite a rapid drop in the inventory. That's about a 10% drop in just 1 week. So I'm going to be keeping an eye on this data very closely, and I think it's very interesting to watch what's happening here in our local market. Let's break it down a couple things here. The most important one that everyone is always asking about is the average sale price. That's a good one. Whether you're buying or selling or just owning your property, you're really concerned about where the prices are at. And in August, the mean residential sale price, the middle point of all houses that sold, was $625,500. Now, last month that was $620,000. Last year it was $630,000. So it's all kind of hovering around that same spot with not a lot of dramatic change. But I want to show it to you on a chart because the last couple of years have been pretty dramatic. If we look back to the pre-COVID years, you can see that prices were a lot more affordable. And as the interest rates were lowered and the lockdowns happened and everybody was kind of trying to change their housing situation, but not as many people were selling it, a frenzy started happening. And you saw the prices escalate, calm down again for a year, escalate again to a crazy high point. That high point being $795,000 here in Brantford. Then as the Bank of Canada came in and started cranking up interest rates all throughout 2022, you saw the rapid pullback in that price down to a low point of $560 around October. And since then, the price has slowly been edging up. In fact, since the high point of our market, which was unreasonably high, by the way, the things got out of control there, but we're down 21% from that high point. But the interesting thing I see on this chart is that we're actually already up 12% from the low point. And I know a lot of people are waiting to think that, okay, real estate prices are going to crash, real estate prices are going to come down. Well, based on this data, it shows that that is actually already in the rearview mirror. During this, from the low point of 560 in October until today, interest rates haven't gone back down. They've in fact kept going up. And so even though interest rates and the cost of borrowing continues to increase, there's still this underlying pressure in our market due to the imbalance of supply and demand. Now, the most recent interest rate announcement was just yesterday, which was a pause and no rate increase. So we'll be looking for the next move sometime in the future to be for rates to start to come down, especially those 5-year fixed rates, which a lot of people, especially first home buyers, need to qualify based on. And if any of that happens, you're going to see increased upward pressure on the housing market. And we'll try to explain in another couple slides why that's happening, especially right here in Brantford. It's not happening in every city. But take a look just historically here at this chart, because over the last 2 years, yes, prices have been very unstable. And perhaps if you bought your home during the peak or even just a year ago, you may be feeling like you haven't gotten very much ahead in terms of growth on your property. You could be down by a point or two. But if you look back just to 2020 or even further to 2021, you can see that the average sale price is significantly up 25% or even 52% in those years. And so we do not expect prices to slide back to those levels. Sure, they've come down from those unreasonable high frenzied bidding wars, people just throwing any number at a property to get into the housing market. That's calmed down. But we haven't come anywhere near to backsliding towards prices from just 3 years ago, especially 4 years or further. This is important to remember because most people who own their home have already been in it for 3 or 4 years. So you have significant equity in your home. And if you're looking to do something with that, make a move, make a trade up, the opportunity is probably still there. Okay, this chart has got a lot of data on it, but I'm going to tell you the story here. What we have happening is a separation of our market. We've really got kind of two markets happening. And what you have is a kind of a fast moving, fresh listings, properly priced listings, still attracting multiple bidders and going for full price or higher. That's everything you're seeing on the right side of this chart. The line I've drawn in the middle is the 100% of asking price. And if you go up and down the chart, you're looking at the sold price. So you can see that there's quite a few properties right on that line selling at full price. And everything to the right of that, representing 40% of the homes that have sold at full price or better, which means multiple buyers are lining up and putting in some offers on those homes. The difference we're seeing now versus a few years ago or the height of the COVID market is we're not seeing, multiple $100,000 over asking and crazy lineups for houses like that. But we definitely are seeing multiple interested buyers, especially in that middle price bracket. That's kind of anything from $400,000 up to a peak of maybe around $900,000. And if the property shows well and is priced properly, it's got multiple people still interested in trying to acquire it. Now, recently, we have been seeing a slight shift and slowdown where more and more homes are being negotiated. And that's a much more traditional market. Prior to the 2020 market, it was almost all listings in Brantford. Put their asking price on and the buyer made an offer and there was a little negotiation and it typically sold for slightly under the asking price. That was very normal. And we're seeing a return to a lot of that behavior. What you don't see here is a lot of massive discounts though. Even the far left of this chart is only 10% off of asking price. Most of the sales, even the under asking sales, are happening at 99, 98, 97.5, 97% of asking price. That's where you see all those clusters. And so as a seller, we want to take this information and understand that we might need to have a little bit of negotiation room in our pricing. But as a buyer, we have to think about that too, that there's not a whole lot of homes just completely selling at discounts. We got to look for a home that's fairly reasonably priced and try to negotiate a little bit of a deal. But it's interesting to know which one of these things is happening when it's your home up for sale or it's the home you're buying. And I've got another slide that's going to get into that in a minute. Let's take a look at the balance of supply and demand, because that is what really drives the real estate market. And I saw something very interesting going on in the last month. First of all, the new listings, the number of people putting their homes up for sale has really dropped, right? If the market was crashing or it was going to be shifting heavily to a buyer's market, you would actually see the number of new listings rising, like really skyrocketing. They'd be telling you people are trying to sell their homes and get out of here. But we're actually seeing that compared to last month, it's down by 12%, which was already down from the month before. And compared to last year, which was kind of a heavy backslide in the real estate market, it's still down 6% compared to last year. So 218 new listings were put on the market. And I'm going to use that air quotes because I want to show you something on the next chart. When I look at what's actually happening, the data doesn't show you this. I actually have to go through by hand and look at each one of these 218 listings. But what we find are 79 of them, or 36%, more than a third of them, are not new listings at all. They have been pulled off the market and then relisted, either to change the price or as a marketing strategy, or maybe they changed the person representing them. But we only actually had 139 new listings. The next slide here shows that we had 132 sales. So if we had only 139 actual new listings come on the market and 132 homes sell, that's a pretty busy, fast-moving market for those new listings. And then you've got what's happening is these strategies where we've taken the wrong approach. The house was listed at the wrong price or the wrong strategy, and we do a cancel or relist. We've got to change the price, and those homes are kind of trying their best to get something going. What I want to show you on the number of homes selling is that the bread and butter of our price range here in Brantford is really this 400 to kind of 800,000. You see the huge chunk, that's where all the activity's happening. There's very few homes now available under 400,000, and there are quite a few homes available over 900, but that's not where the buyers are buying. And that's been traditional for Brantford. It's a working class town, and the most homes and the most buyers are existing in that middle range. So that tells me, again, if you've got a home to sell and you're thinking about selling it, and it's going to be priced between 400 and 900,000, we've probably got a pretty good chance at getting it done quickly and aggressively and having multiple buyers. It's a very active market. But if you have a home that's going to be over $900,000, it's going to take a little bit different approach. We've got a little more custom solution here because it's not as active of a market. Okay, let me show you the inventory chart, because this is what happens when you have supply and demand, and at the end of the month, you either have a deficit or a surplus of homes on the market. And so since about April, we've been seeing the steep rise in the number of homes for sale, but that peaked. That actually peaked back in July, and we've seen it come down from its peak now to 303 homes for sale. And actually, as we sit here today, like I showed you on the first chart, we saw a quick decrease in that again. So we're down into like the 280s, and I expect that number to keep falling right down into the winter. Now, how quickly it falls, that'll be a real indicator of our market. But it looks like the peak inventory is behind us. The peak number of new listings coming on the market is behind us. But what's not behind us is the demand, because demand for homes actually went up in August. So what happens through September and October if the demand for those middle of the range homes keeps pushing, but more new homes don't come on the market? That inventory is going to continue to slide. And this isn't happening in every city. I hear reports coming out of the GTA that inventory is continuing to climb. So I think there's a unique thing happening here in Brantford because it's an affordable community, where as people are having a tough time getting the home they want in the city closer to the GTA, they're actually finding that Brantford's affordable and they're coming down here. Okay, last chart of the day, and this one is brand new. It takes a little bit of work to do an analysis like this, and I want to walk you through it. What I did is I broke down how long the active listings have been on the market, and also I took those 132 sales and broke down how long were they on the market before they sold. And what I've done too is take out any of that cancel and relist game, so we add up the total amount of time and not just the most recent listing. And so what I see here is that we've got the fast moving market. If we look at like 5 weeks or less, what you have is a ton of sales happening in 5 weeks or less, and very few sales happening comparatively 6 weeks or longer on the market. You see that on the red side of the chart. But over on the blue side of the chart, what you can see is there's still quite a bit of activity. Obviously, new houses coming on the market, and every week and every month. But what we see if we look at 6 weeks and further on the blue side of the chart is we've got a lot of stale, older inventory building up. So these are homes that have not got a successful offer, they've not sold, but they're kind of just hanging out. Maybe they've canceled and relist, maybe they've changed their price, but they're just kind of not as active. The stat we use to measure this is something called month supply, and it's basically, you can think about it as the turnover rate. Anything under a 2 is a really busy seller's market. And kind of anything we're creeping up into the 4 or 5s, we'd call that a buyer's market. And if you can see, if we break this market in half at the 5-week mark, we actually only have a 1.3 month supply of houses in that 5 weeks or less. So the turnover of those fresh listings is happening very fast. When we look over 5 weeks, it's actually a completely different market. So that, once we kind of get over 1 month, 35 days on market or so, the pace of it really slows down. The buyers are not out there, that excited about these older listings. And those older listings, probably need a significant correction, a change in their marketing strategy or their pricing strategy to get the job done. So 4.7 months supply, there's plenty of choice. If you want to go out looking at older stale listings, there's tons of them to go look at. But when you mash these two numbers together, you get an average that can be misleading. And so this is important on both sides. If you're a buyer, the reason this is important is because you have to know that if you're going to go out into the market, you have to have a two-phased approach. If you're going to be shopping in these fresh, watching the new listings come on the market, you gotta be ready to act fast, right? You gotta be ready to act fast, make decisions fast, put in that offer quickly, and put in a strong offer. It doesn't have to be as strong as it was a couple of years ago. You don't have to go crazy in a bidding war, but you could expect to be in competition. On the other side, if you're out deal hunting, you've got to really figure out which one of these listings, if they've been on the market for a month or more, are these sellers actually really serious, right? And two things are going to happen in that group. You've got sellers that really do want to get their home sold. They just didn't do it right the first time. And so they may be up for a price change, a renegotiation. They might be able to, get a good deal on one of these properties. But you've got another group of sellers who just threw their home on the market at an aspirational price. And if they don't get that price, they're not going to sell their home. So those ones, they might just sit on the market month after month after month. Look at the number of homes, more than 16 weeks on market. So more than 4 months on the market, there's 48 listings. And there's only been 7 sales of those type of homes. So once the home's been on the market for that long, it becomes quite rare without some kind of change in strategy for it to sell. Now, if you're a seller, the clear message here is really making sure we do it right the first time. If we're bringing a home to market, we want to slow down, do our analysis, and price it and market properly, because the best chance of getting it sold is in that first 5 weeks. After that, it becomes increasingly hard. And so I recommend putting the most attractive price on it right out of the gate, making sure all those repairs and those changes to the house and the staging and the marketing is all just perfect. And if we do that right, you should have multiple buyers looking at your property. Okay, that's it for today's video. I got through a lot of it. I hope this was really useful for you, and I'm going to keep bringing you interesting information. If you have any questions, leave them below. And of course, thank you again for watching. Please like and subscribe, and we'll see you on the next video.